What's going on, guys? Today I have another very exciting video for you. We are talking about a stock that I haven't really talked about on the channel a whole lot, and that is AMD. We're going to jump in, take a look at the chart, where the stock has been over the last year or so, and then we're going to take a look at the PE ratio, the earnings, some free cash flow, and basically at the end of this video, we're going to look at a potential price target for ADM compared to its previous PE ratios and where it's been at in the past. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. So AMD is a stock that I've been keeping an eye on for a while. It and Nvidia have been one that I've been tracking for quite a while, and over the last 5 days it's actually down 10.5%, which is kind of surprising, but also the market's had a lot of weakness. It's been a really weird situation in the market where a lot of good economic data has came out, and basically that's made people worried that the Fed is going to look at those numbers and say we need the economy to be worse and keep raising interest rates. So that's had a big effect on, a lot of these a little bit more speculative / tech stock companies like AMD. So obviously it's been hurt quite a bit over the last 5 days, down 10.5%. Over the last month though, it is still up almost 10% here. Last 6 months, it's actually down 31%. What's very interesting is, again, the stock a few months back was around $100, and then it crashed all the way down to almost $50, kind of $50 to $60 range. And that is where the stock got very interesting to me. I looked at these stocks, I looked at AMD, I looked at Nvidia, and I was really considering pulling the trigger on some of them, but there were just more interesting opportunities out there in terms of like Meta and other stocks. And honestly, Meta is still very interesting to me, but in terms of diversifying, I could see AMD and Nvidia as being a play and a good play addition to the portfolio. So again, it's down 31% over the last 6 months. Over the last year to date is down 53.3%. And if we go out a year, it's down 51.71%. So down very significantly over the last year. And the biggest thing that's drawn me to AMD is actually its valuation. So when you look at AMD and where its forward PE ratio is at, is right now it's sitting at under a 20 forward PE, which is relatively good. Obviously it's great if you see it under 15, which we saw a few months ago. It actually was around a 12.87 forward P ratio, which is absolutely insane. When I think of a company like AMD and Nvidia, there's so much growth potential still there moving forward. The amount of chips that we use in our daily lives, it's not going down by any means, it's only going up. So there's a lot of growth for these companies, in my opinion, moving forward. And especially kind of how the market was valuing it in the past. When we look at its forward P ratio around a year ago, it was anywhere from a 27 forward PE ratio all the way up to almost a 44 forward PE ratio. So again, there's kind of a disconnect there from a year ago where there was a lot of, growth priced into the stock, compared to now where there's not a whole lot of growth. It's almost being valued like, like a food company when you look at these valuations. And again, I don't really see that as being, a fair valuation for a company that has a ton of growth and growth potential in front of it. The only concerns that I've really had with AMD recently and Nvidia is there's only really two major players currently in the market, which is Nvidia and AMD. And Nvidia is kind of the number one player. AMD is the number two player, but other people have started to kind of enter the market. The biggest and most notable one being Apple. They've started making their own chips, and obviously it's never a great thing having Apple come in to try and compete with you, because Apple tries to do things to the best of their ability, and they have plenty of cash to compete and basically dump money into things until they are successful at it. So that has been one thing that's kind of been a turnoff to these companies, is considering, Apple as being potential competition, but their valuations on these companies are just ridiculously low, in my opinion. And as I mentioned, chips don't really seem to be going anywhere, right? The more we kind of expand technology, the more chips are used. There's chips in refrigerators now that, help you reorder milk when you run out of milk. And just every piece of your life is now being more and more integrated into, technology. So it's very interesting when we look at some of these numbers that analysts have projected out there for next year, especially when you look at the earnings. So EPS per share for this current year is $3.52. And next year, it's only projected to be $3.65, which is very interesting. What's also interesting and important to note is that for this year, the low EPS is, $3.39. The low EPS for next year is $2.96. So there's obviously a lot more questions into where the EPS are going to play out over the next year. And there's a larger range here when you look at that. Obviously, 2022 is wrapping up, so they're going to have a tighter range on these numbers. But when you look out a year, this number seems very low for what we could see. And that would be a very big miss, if they come in all the way down here. But this is just very little growth. When you look at this number, there's not a whole lot of growth there. We can actually do the math real quick and look at this. So $3.65 minus $3.52, that's 13 cents. And if we divide that by $3.52, we can see that that's only a 4% growth in their EPS. So that seems very low for a company, again, that is in a great position, number 2 player in the market, and has a lot of opportunity to keep, their growth high over the next year and over the next 5 years. So here we have free cash flow, and basically over the last 3 years, we've seen a lot of growth in these numbers. You can see here in 2019, they hit their first positive free cash flow number. And then in 2020, they actually grew by almost 200%. For free cash flow. And then in 2021, they grew that number by another 300%. So that is absolutely insane growth. We can see here $3.2 billion in free cash flow in 2021. And their 2022 numbers, from what I've seen, are kind of similar to that $3 billion to $3.5 billion number. So we'll have to see for sure when they actually release those numbers for 2022. So I wanted to end off this video by taking a look at their EPS and basically the projected EPS and what that could mean for PE ratio, depending on if they hit their average analyst expectations or their high expectations, and then also take a look at their PE ratio, where it's at right now, where it could go in the future, and basically come up with a potential price prediction of where AMD could be at in a year if they hit some of their previous forward PE ratio numbers. So to start off, when we look at EPS, we can see that these two numbers, I basically just pulled these from Yahoo Finance. For 2023, analysts had $3.65 as the average estimate, and then they had the high estimate as $4.57. And with those numbers, what we can do is basically come up with a current PE ratio. So all we're doing is taking the current price of $70.14 and dividing it by the earnings, and we come up with a 19.22 PE ratio, which again is very similar to where it's at right now, just because the earnings are similar to where we're at right now. And then also for the high estimate for EPS of $4.57, if they actually achieve that based off the price that we're seeing right now, you're actually getting the stock at a 15.35 PE ratio. So that is very low. That is very attractive PE ratio. Obviously, if they come in really poorly and hit that 296 number, we will see vastly different results. So if they come in there, we are actually sitting at a 23.7 PE ratio. So again, to kind of wrap that all up, basically right now they're sitting somewhere between a 15 and a 23 PE ratio based off analysts' expectations for EPS. And with that, we will jump over and actually come up with a price prediction for where AMD could be at in a year. So we are going to use its actual current forward PE ratio. So if we jump back over here, we can see again that their forward current PE ratio was at 19.23. And what we are kind of projecting based off their forward PE ratios of the past, anywhere from like a 25 to a 30, just to be very conservative. I mean, we could go all the way up to a 43. I don't know if that's going to be realistic. We could even bump this up to maybe a 35, just to be, a little bit more aggressive on potentially where the price could go. So if we actually just go to a 25 PE ratio, the stock again rebounds in price and basically the earnings stay the same, we would see the stock rise to $91.19, which would be a 30% move. And then if we see it actually rise to a 35 PE ratio, we would actually see the stock jump all the way up to $127.66, which would be an 82% move. So again, obviously this is more based off investor sentiment. So when you're looking at PE ratio and potential forward PE ratios, basically investors are paying more for a dollar of earnings. So they're paying 35 times, $35 for every $1 of earnings is what this is getting at. So investors have to be looking at a stock like AMD and seeing a lot of growth potential to be willing to pay, you know, a 35 for a stock like that. So that's important to keep in mind what these numbers actually mean. And what we can see from the chart is that 127 is really not out of the realm of possibility. We were actually around 123 back in March, but ever since then, obviously the Fed has increased interest rates in a very significant way, and that affects a lot of, you know, growth companies like AMD, like Nvidia, because, you know, basically cash becomes more expensive for them to be able to invest back into the business. So that's had a huge effect, you know, across the stock market, and AMD is no exception. So for me right now, AMD still isn't a buy. I like the valuation. I like where it's at in terms of, you know, being around a 19 PE ratio, and I do think it has a lot of growth in front of it. The free cash flow is very promising. If they can keep that up, I think that would be huge for the business. The big thing is the competition from Apple, you know, being a turnoff for me. And then also just, you know, them being the number 2 player. Nvidia is very interesting also, but Nvidia trades at a lot higher P ratio. So I can do a separate video kind of going over a comparison between AMD and Nvidia. If you're interested in that, make sure to leave a comment down below. But yeah, right now I'm just still kind of on the fence. It's not really a buy yet for me for AMD, but you know, maybe in the future if the valuation goes a little bit down and you know, we start seeing free cash flow continue to stay high, maybe they even incorporate a dividend. That would be very interesting for a stock like AMD with, you know, growth in front of it. If they had even like a 0.5 or 1% dividend, that would make the stock, you know, more interesting. But overall, yeah, just not yet a buy for me. But I'd love to hear you guys' comments down below. Are you buying AMD? Are you buying Nvidia? Are you buying, you know, Taiwan Semiconductors? That's a big Warren Buffett buy recently. I'd love to hear your thoughts and perspectives down below. But if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.